Hello everybody, this is Stanley, welcome to my channel, and this is our second episode of our YouTube live for this month. Thank you for all of you who's joining us. If you can hear me, just give me a shout out. Oops, give me a minute. Just give me a shout out. Let me know where you are connecting from, and maybe what are you planning to have for lunch. Alright, I can see. Oh, Satay Man. How are you this afternoon? And David, nice to see you again. And ABC, of course. Right, today we have a very special topic, which is we're going to talk about 3 stocks that I'm personally invested in and holding for the future, for the long-term future. And yesterday we talked about what I'm thinking of the market and how we can actually position our portfolio during this pandemic for it to be in a much safer place. And we share 5 key criteria that I look at for companies and why I'm going for more higher quality stocks right now. And today, I'm going to talk about these 3 stocks that fit these criteria. So let's get started. All right. And as usual, our usual disclaimer, please do your own research before you jump into any of these stocks. But as a full disclosure, I own all these 3 stocks. So I'm a little bit biased right here. And also in recent news, our VIA Club registration is actually open for this week only. We'll talk a little bit more about that later on, but let's get started. First stock that we're going to talk about is actually Google. This is a stock I own for quite some time, for a few years now, and we are actually talk about this stock and feature these stocks within our VIA Club as part of our stock of the month. So we have this feature called stock of the month within our VIA Club, where I talk about one particular stock that I liked the most during that month. And this stock was actually featured back in July 2019, so roughly about a year ago. And since then, the stock has performed quite well, about 40% up till today. It is also part of my own portfolio, and I'm still holding it, and I still love it very, very much. If you guys have any question about any of the stock that I'm talking about during this whole webinar, feel free to write in on the chat. I can see more and more of you guys joining in. Mingli, Eng Lim, Marita, I hope I pronounced it correctly. Richard, Jasper, nice to see you all. And if you have any question, just put it down on the chat. I'll get to them at the end of our session, right? And why is Google so interesting to me? I always like to invest in stocks that I understand and I know a little bit about, and definitely Google is one of these stocks because my life sort of revolves around Google, right? Even my business with Value Invest Asia lives on Google itself. So I'm sure many of you would be quite familiar with Google as well. If you just think of all the different products that they have, be it Gmail, Android, Google Search, your Maps, Chrome, and even YouTube right now. We are right now on YouTube. All these have billions of users, and Google is actually one of the companies that has the most number of users across all their products, right? All these 6 products right here, they have almost all of them has more than a billion active users, maybe even daily active users within all their products. And they have a very simple business model. They give all of these products to us, which has huge utility, for us for free. And in return, they sell ads to us from these products. And it is a huge business. Today, in the last quarter results, close to 80% of their revenue still coming from advertising, so across all their products. And that includes YouTube. And YouTube is one of their fastest growing, advertisement product right now. Now it's already about 10% of their total revenue. And YouTube, they only started monetizing YouTube not just a few years ago. So that's quite amazing how fast it's growing. But the company is also very big in other areas, especially in cloud computing. They are the 3rd largest cloud computing provider right now in the world, just behind, of course, Amazon, AWS, and also Microsoft Azure. Google Cloud right now is about 8% of revenue and is growing. I think one of the, if not the fastest sector for Google. The company, of course, is facing some slowdown during this pandemic, just a slight slowdown in the last quarter. But overall, year on year, on the past 3 years alone, the company is actually growing about 20% a year in revenue. That's quite amazing for such a large company. We're talking about a $1 trillion company right here. Of course, Google has also in the past few years changed their name to their holding company to Alphabet, and they have gone into investment. It's still a very small part of their business right now, but hopefully we'll see some interesting thing coming from that as well. They changed their name to Alphabet for a reason. They want to bet on alpha bets, right? Okay, and this basically kind of a summary to Google and why I like it so much, which I feel that it's almost kind of close to, I wouldn't say impossible, but have a very, very low risk that Google business model will fail, and it would continue to thrive for many, many more years to come. And just because as more and more of our life become on the internet, we will become more and more reliant on Google. In fact, I would say that Google actually controls more of our life to maybe some of the governments in our country. So that's very, very crucial, and they have huge power and also a great business model. And if you compare to their valuation, it's of course market is having quite a high valuation right now, but generally speaking, if you compare to all their peers, their valuation is not excessive. It's quite in line with the likes of Apple or Facebook. Of course, they are still much cheaper than a company like Amazon or even Netflix. And this is a company that I'm very confident about. I'm holding it for a few years now, and I plan to hold it for even decades to come. So that's company number one. Let me know if you agree with me, if you like Google or you're more of an Apple fan, and what's your question on Google. Why don't we go to the next company first? And the next company is Microsoft. I actually done a video on Microsoft not too long ago saying that this is my favorite stock of the year for 2020. If you have missed out on that video, you can check it out on our YouTube channel. But I'm very, very optimistic about Microsoft right now, and of course, there's always a jab at Microsoft saying that in the mobile age, with more of our computing being done on mobile, would Microsoft really have a future? But if you think about it, Microsoft has really not been a consumer brand per se. They're more of a business brand, and many, many businesses are still running on Microsoft and couldn't really operate without Microsoft. We featured this company back in January this year, January 2020. And, since just the beginning of the year, this company the stock price has shot up about 30%. And I still like it even now. I'm still holding on to it, and I'm planning to hold it for many, many more years to come. And if you look at Microsoft, so just as a quick summary, the basic of Microsoft comes down to 3 pillars, and all 3 relates to the future of computing. They have number 1, cloud computing. They're now the second largest cloud computing company in the world, just behind AWS. And also they have their enterprise services, so their whole suite of Microsoft 365 and Office 365, including some of their even, I guess, more business-orientated software like maybe Dynamic or SharePoint, which consumer like ourselves might not be using. So that's their second pillar. And their last pillar is, of course, personal computing, both with Windows and also with their Xbox. Interestingly, all 3 business is about a third of their revenue. So each segment is about 1/3 of the business. And that's why I like this company so much. It is not so much as many of the companies, even Google that we talked about just now, they are still sort of a one business model tech company, but Microsoft is really a conglomerate of tech, and their their business is very diversified and very well diversified with one-third each in each segment. We can see that they are very well adapted in the current cloud computing era as well, and they successfully transitioned their office from buying a one-off license to a subscription base with Office 365 and Microsoft 365. That's very successful and it's still growing very, very strong. On the personal computing side, it might be struggling a little bit and it's not growing as fast as the other two segments. But with its Surface line and also its Xbox Series X is just coming up, I think they should at least have a stable growth going forward, right? But of course, not as high, fast growing as the other two. If you look at Microsoft, it's really quite amazing. Their revenue is growing about 14% a year, and its income is growing about 20% a year over the past 3 years. It means that the margin is becoming better and better. The move to cloud computing is actually improving their margin more and more. Just now we shared the valuation of Google, including Microsoft, within one of their peers, about 37 times PE. I wouldn't say it's undervalued, but I'll say this is a great company at a fair price, and I still love it, right? And the last company we're going to talk about is Alibaba. We talk about two great companies from the US and now the tech giant on the east from China, Alibaba. This is one of the largest tech firm in China. Technology in China is still dominated by two large firms, mainly Alibaba and also Tencent. And we featured this company quite recently, actually just in June 2020. And even, once we featured in June 2020, the stock price has actually gone up about 28% despite what is happening in the trade war and also the concern of whether the listing in the US would continue. But now they are dual listed also in Hong Kong, so you can choose to invest either in the US market or also in the Hong Kong market. Alibaba is interesting because their business is on first look, it doesn't seem that they have any relationship to each other, and people might mistake it for just another Amazon, right? Amazon of the East, but that's not really the case. Alibaba is actually more like Microsoft in my opinion. They are a business software. They don't sell anything to us consumer, but they just provide the platform for businesses to do business internationally or online. So in a way, they are a business software solution provider. And of course, their largest platform being Taobao or Tmall, even Alibaba.com. Internationally, they have Lazada and AliExpress. All these, they lump it as core commerce. And this is, of course, their key bread and butter right now, about 87% of revenue coming from this. Even new acquisition that they make is included inside here, like Ele.me, which directly compete with maybe Meituan Dianping. So they're even still growing that segment of business quite aggressively. The second largest part of their business is actually cloud computing. They're actually the largest cloud provider in China. I think they have more than 50% market share. This is quite clear because in China, I don't think that any of the Western cloud provider would be dominant inside. Surely the Chinese government is not going to store their data on AWS or Azure, even though Microsoft has been in the country for so long. And Ali Cloud is extremely big in not just in China, but also in Asia Pacific wide. They are very, very strong, even here in Singapore. So that's something that is growing very fast, about 8% of revenue right now, and close to break even. So if they allow it and slow down their growth a little bit, they might even be profitable. But for Alibaba, maybe it's not so important that they keep this segment profitable at the moment. So they're sort of trading around break-even point. And lastly, they have what they call digital media. This is quite maybe at first glance doesn't seem to gel well with their business. They of course they have Youku, Tudou, sort of you can say the Netflix and YouTube hybrid of China. Of course, they have even production company like Alibaba Pictures, a lot of live streamings platforms. Of course, even news like their UC News, and even browser, their UC browser. This is just 4% of their business, and of course still loss making. But I think it is still very important to Alibaba. Why is that the case? Because Alibaba, if you look at it, the business of Alibaba is maybe like a digital mall. They are a shopping mall. They are a digital mall holding maybe a business expo like Alibaba.com, or even just the consumer facing like Taobao or Tmall. And people come to this digital mall to buy things. So they are attracting people who are maybe looking for things to buy, yes. But in a mall, in a physical mall, they will try to attract outside audiences as well. People who might not be in the mood for shopping, but they want to attract them in, and in hope that they will spend some money in the mall. And in physical mall, they try to do events, maybe expo or maybe celebrity greet or meet. Digitally, how Alibaba attracts more audience is through content. People come online to watch something and get entertainment from it. And from this content, Alibaba can then advertise on this content and attract people to buy some of their merchandise on their platform. And you can see it as a funnel. The content and social media attracts the people, attracts the traffic, and then the traffic need to disseminate to somewhere, and that's where their e-commerce store comes in and direct this traffic and these audiences to put in an action, basically to buy something. And it's a perfect flow, a perfect model of capitalism at work. So that's Alibaba at a nutshell. And a bet on Alibaba is not just a bet on Chinese consumer, because they are so big right now. It touches almost every fabric of the Chinese society and beyond. They are very aggressive in Southeast Asia as well. So it's a bet on the technology of China, the consumer of China, and also the consumer of Asia at large. So I own these three companies as I talk about, and I share my entire portfolio on VIA Club as well, sharing with most of all our members. And in the recent years, I have been trying to shed off some of my weaker companies that I am not so confident in, and putting it into such example of these three companies that I feel can do pretty well over the next 5, 10, or even 20 years, and I can keep them with a peace of mind. I can sleep very well with such companies. And my portfolio has actually done decently well, I would say. They have a small blip at the beginning of the year, about 10% drop, but has since rebounded about 40% since then. I'm very happy with the portfolio. Not so much I want it to grow at a crazy, amazing speed, but rather I'm building a portfolio that is relatively safe, much safer in my opinion than the general market, and I like to keep it that way, right? And I share all this and more on our VIA Club. I see more and more questions coming in. I'll try to get to your question, but before that, I'll just maybe share a little bit about VIA Club and some of the features within our VIA Club, and see if this is something that you want to take our relationship to the next level, right? Apart from sharing my portfolio, I do share a weekly report with members, including a stock of the month. We talk about these three stocks are all part of a stock of the month. We have shared roughly about 14 stocks since the start of our VA Club, and most of them have been doing pretty well. Next, we also have what we call a yearly stock guide. Every January, we publish a stock guide with 10 stocks for the year, and we also include a grand webinar, sometimes across 2 full days of webinar, sharing with members, going through each and every companies in detail and answering any question that they might have. And one of the most valuable thing about VIA Club, I feel, is the access to our community, not just on our website forum, but also on our Facebook group. And many members are very active and very knowledgeable. I myself is learning a lot from them. And of course, as we are doing now with our live webinar, we also do quite regular live webinar with our members. We're actually doing one next week for our members to review our stock guide 2020 and what they can expect, and what's my view on updated view on some of the companies within our stock guide 2020. Right? And so this is just a summary of our VIA Club features, much more than what you might get from just our website or even our YouTube channel. And if you're interested, it only costs about $158 a year. And there is also a 14-day money back guarantee. So you can try it out, and if you don't like it, money back guarantee to you. So if you're interested, you can always check it out. This is our link. Just go to bit.ly/clubvia. I'll put a link on the show notes as well. But I can see more and more questions coming in for the 3 companies, and let's jump into some of the questions that you might have. All right. Okay. Let's just let me refresh the chat so that I can make sure that I don't miss some of your question. Amazing. Okay, I'm reading. Let me see. Hazel is asking, given that tech stock is at a high, is it time to enter the market? Do you think that the US election would impact the market sentiment? I guess the election, is coming, and most of the time in the past, election has made the stock market more volatile, but not necessarily weaker. Even if my memory serves me right, the last election when Donald Trump won, and the market actually went up by quite a lot. So I wouldn't try to time the market. The stock market generally is quite high, but given the current circumstances with QE and also the very, very low interest rate environment, it's hard to say when the market will decline. Generally, I try to stick with the company itself. All the companies that we talk about and some of the companies that I own, I still feel the valuation is quite reasonable given the current market situation. And I'm paying a great company at a fair price. So, even Warren Buffett agrees that it's better to buy a great company at a fair price rather than a mediocre company at a wonderful price. So that's my, I guess, philosophy of it. And I don't really try to time the market as long as I have a long enough time frame. For example, if you can look beyond, you can hold something for at least 5 to 10 years. It doesn't really matter if the market is going to have a correction in the next few months. Okay. And Cheng is asking, Alibaba in Hong Kong or Alibaba in US, which one has less risk? Actually, they are identical company. They're dual listed. So you're buying the same thing. You're buying the same company. Of course, geographically saying, and maybe politically speaking, the Hong Kong one might give us more confidence given that it is under the same jurisdiction in China. So the US government can't really control it in that sense. So if you have enough capital to invest in their Hong Kong shares, that might be something for you to look at. And if Alibaba start to pay a dividend in the future, the US stock will get a 30% dividend tax as well. So there's something to consider. But the Hong Kong share, because they trade in lot sizes, sometimes a minimum purchase would be quite high. I myself invested in the US stock, but that's just because I bought it before the Hong Kong got listed. So if I have to choose again, most likely for me, I'll choose the Hong Kong stock. But in theory, there's no much difference. Okay. Okay. I can see many of you is asking the same question. Kenny Tan, may I understand why you picked Baba over Tencent? I do own Tencent as well. It's actually one of my largest position. Just that if members know me well, I've been talking about Tencent for the past 5 years, so I thought that I should give it a rest instead of showing that I'm sort of like a Tencent fanboy. So, but it's definitely a great company. In fact, I do feel that if you're just optimistic about China tech in general, the two companies that sort of it's inevitable that you would want to invest in is Tencent and Alibaba. So I'll put them in the same, I guess, same category of high quality stocks. Okay. Vincent is saying, you featured China Gas Holding is one of your YouTube video. Do you think the company is still relevant and worth investing in? Right. China Gas is actually part of one of our Stock Guide 2020 stock feature. We were going to talk more about the update on this company next week to our members. But generally, the company, I like the business model, but the company is very dependent on government regulation. So because it's in the utility space, it's still very dependent on the government regulation. So it really depends if you're comfortable with that risk. So that's something to think about. Okay. Chinkiet is asking, Alibaba and the upcoming Ant Financial, which one you're more optimistic about? If you see my last video about Ant Financial, you know that this is a company I'm watching as well, and hopefully I can get to invest in it. Maybe after the IPO, I'd like to monitor it for a while. But Alibaba itself owns about 33% of Ant Group. So, if you're investing in Alibaba, you sort of get exposure to Ant Financial as well. Ant Financial is, I would see it as almost a bank. I really see it as a bank, more of a digital bank. So I'm expecting great things from this company still. Okay. Ivan's asking, Hong Kong and China are now one and facing ban and delisting from US. Why would anyone want to invest in them? Is it wise to pull out fully? As China and Hong Kong are now one and facing ban and delisting from. Okay, I guess you're talking about the Chinese company listed on the US exchange. So I guess the US government can sort of put in whatever regulation they want on their own jurisdiction. But Alibaba is now dual listed, so they are even listed in Hong Kong exchange, and most of their business is also in the East, although they do export globally. So I don't think the US government would have that big of a jurisdiction over them. Okay, Englim, Thai, do you have a team, even if it's small, to support VIA Club? Right, of course, I'm sort of the face of VIA Club, but we do have a few writers with us who do great research, and our best support and our best team is actually our own members. Many of the things, sometimes when members is asking questions, a lot of our own members is very helpful in helping them find the answers to some of their questions within the forum as well. So I can say that I'm very well supported by not just my writers team, but also by my members as well. Okay. Let me see if I miss out any question. Okay, June is asking, any risk of buying Tencent's over-the-counter stock in the US, as I can only afford to buy one stock? Yeah, Tencent is sort of dual listed, but not officially. They do have an over-the-counter stock in US. I would see it as slightly riskier than their Hong Kong main listed shares, since it's over the counter as well. So there's less reporting to it, and you might not know how committed Tencent is with that stocks. We recently see some of the tech firm listed in US starting to get delisted. The most recent one is 58.com. Which is also a portfolio company of Tencent. So if the interest over there is not that high for Tencent stocks in the future, or the float is not that big, maybe Tencent might want to delist it. And if they delist it, it really depends on what price they want to delist it at. So there's a certain amount of risk over there. I would say the Hong Kong stock is more transparent in a way. Okay, Ivan, what's your view on Ireland ETF? Wow. I have to confess, I know nothing about Ireland, so might not be the best person to answer that question for you. Okay, let's take two more questions. What's your view? Yao is asking, what's your view on CQQQ? Okay, so for the rest of you, if you do not know, CQQQ is a ticker code for an ETF that tracks the tech firms in China. I like it. Just that the expense ratio can be slightly higher than some of the other ETF, especially the US ETF. But if you just want a lump sum way of access to China tech, that's pretty, I would say a pretty good bet, in my opinion. I don't own it, mainly because sort of my own China ETF I view it as Tencent and Alibaba, since they invest in other tech firms as well. So in a way, I'm tagging on to Tencent and Alibaba as my China tech ETF. All right, maybe the last question. Right now, sorry, I'm okay. Last question. Let's take this one. Is Tesla worth to hold? I don't own Tesla. I know it has been quite amazing stock to own, but I don't really regret it. But it's just a company that I view it as slightly riskier. So I think Tesla is extremely smart in managing their capital. So the market support of Tesla is why Tesla is successful. Because Tesla is, at the beginning at least for the past 10 years, has been building up their growth, and they need a lot of capital competing in the automotive industry. And because the market love it so much and give it sky high valuation, the company is able to raise money again and again from the stock market just through private placement or rights issue, maybe not rights issue, but private placement to fuel their growth. And so the success of Tesla stock price, let me rephrase that. The success of Tesla as a business also depends on the success of Tesla's stock price. As long as investors love it, Tesla has a higher chance of surviving and thriving in the future. So I sort of see it as a double risk there. I'm not just risking the business itself, but I'm also risking if the investor will stay positive about Tesla. So that's sort of why a risk I don't want to take, and that's why I didn't invest in Tesla. But if you're happy to take that risk, good for you. All right. Thank you so much for all your questions. Before I go, we actually have one more. Oops, missed out. Before I go, we actually have one more webinar tomorrow, where I'm going to talk about three of my biggest mistakes ever when it comes to investing, and why what you can learn from this as well. So if you're interested, do stay on tomorrow at 12:30 p.m. at the same time, and I'll share with you three of my biggest mistakes and how what you can learn from it. If you're holding on to some stocks that is losing in capital and you don't know what to do with it, maybe this next webinar will help you. So thank you very much for your time. I'll see you tomorrow, guys.